On the surface, the S&P 500 looks calm, but when we look under that hood, there's some things going on that looking spicy. Particularly, we have a lot of weakness in these Mag 7s that we talked about, but the semiconductors have ripped back to 52-week highs, setting up like they want to break out. I want to really take a closer look at this with all of you right now. I'm Patrick Ceresna, and I do these actually every morning, Monday through Thursday at 9:30. If you're really enjoying it, make me a part of your morning routine, and I'll give you all sorts of great updates. So let's dive into this. I want to start here by looking at this S&P 500, and what you can observe here is that things remain very heavy, and that's because there's a huge muddle. The breadth of the market state is healthy. We look at the S&P 500 equal weight, continue to break to higher highs. There's actually a clean bull market when you're looking at the broad S&P and the movement of all stocks. But the Mag 7s continue to look like shit. Like, you look at this chart on the Mag 7s here. They've been breaking down. The bounces have been incredibly weak. It's just not good. Like here, I'll put the 50-day moving average on here. You can see that this Mag 7 index of those stocks is dragging. Now, that major weakness has been in the software space. The Oracles and Microsofts have been being murdered on the downside, but there is some interesting things going on in the semiconductors. And so what we have on the other side of this is the semiconductor index having had a quick correction. It was essentially a retest of the 50-day moving average and the 50% retracement line, and we bounced right back to its highs. And so it looks like here, like the semiconductors are ready to go for a rip up to potentially even 450, 460. So it's kind of like, how do you size up the fact that the broader Mag 7s and the index look and the NASDAQ look very weak, but yet the leadership in this AI space is there. This is not the only story. Like, for instance, when I put up NVIDIA specifically, the bounce got it right back to its December and January highs, asking the question whether or not we can break this overhead resistance on NVIDIA, sending it for a retest of those October and November highs. This would certainly be a short-term bullish tailwind. But what also feeds into that is the continued bull market out in Asia. Particularly, I want to focus on two indices. First, we have the Japanese Nikkei, which obviously has some macro and macro drivers that actually drove this breakout on the upside. But this has been where a lot of money has been flowing in this AI story. But the hottest market of them all has been the South Korean index, the Kospi. And the Kospi, with Samsung and SK Hynix as major components within them, have just been on fire. And look at this, a fresh new 52-week or all-time high on this index as these continue to be hot. And so while we have seen some parts of the technology and Mag 7 space roll over, some of these AI stories are still ripping. And so the question here, are the semis going to break out to 52-week highs and potentially add some short-term fuel to this market, something that the market desperately needs in order to attempt to break to new highs? I want everyone to just watch that semiconductor index and see whether it breaks out and whether NVIDIA can get out of that trade range and start pushing back towards its all-time high. And those are going to be the big puzzles to solve here in the next little bit. So overall, the S&P remains in this trade range, and I think that it really does continue to need some of these big components to actually contribute in order to drive that major market advance, because the sector rotation has been the theme. And particularly, I'm going to focus where that money's been flowing. This is the XLP, which is the consumer staples. Like, they have been awful all of last year, and come January, in a big sector rotation probably done by money managers, there was a conscious decision to sell down Mag 7 exposure and to redistribute in the market. And one of the huge benefactors has been these consumer staple names. You know, all of the Procter and Gambles of the world that have just been absolutely on fire here in the last little bit. You can see this huge rip. The other place that's been a huge benefactor has been the energy space. Look at the XLE, which is all of your fully integrated big energy companies, and they have just been absolutely benefiting from all of these sector rotation and flows. And so what's interesting is that even in spite of energy and consumer staples doing so well, there's just not big enough components in the S&P to drive a 52-week high breakout. And this is the problem. Is happening in these kind of spaces, it's not able to lift the S&P 500 making new highs. So there are bull markets going on. There are things that are very hot, and it's not enough to drive that index higher. And the point here is that this index could end up being stuck unless those mega caps participate. And I think that's the best way to think about the markets from here. Just want to quickly touch on a couple other quick things, keep giving you updates. The dollar remains incredibly weak. The fact that it failed below 98 and is breaking down is not good. Now, the jobs numbers yesterday tried to bump the dollar up, but the weakness is still evident. If 96.50 gives out on the downside of the dollar index, it will reopen that downside and potentially send the dollar down to 95 or 94 on the downside. The path of this resistance is still for the dollar to weaken, and there is no sign of any bulls. And so let's see whether that support line gives out or not going into the weekend. The other thing I wanted to leave you all with was just a quick update on crude oil. Look, crude oil, the narrative has been so bearish. There's been zero bull catalyst. Everyone, big theme or thesis remains that oil will stay suppressed into the midterm elections because there's a political agenda on that. Yet the skews are so steeply in the oil skews are so steeply right-tailed that there's some sort of upside surprise potential that is clearly being baked into the options markets, and the price action continues to be very well accumulated. Look, we're holding well above the 50-day moving average. Every dip is being bought. And no one is coming up with any bull narratives for this. And so to me, obviously, there could be a geopolitical surprise. Something happens in the Middle East. Something could spur a breakout here. All I can say is right now is being very well defended, well accumulated. All dips are being bought and no one loves it. And that's the kind of trade I love to keep a close eye on. And so that's definitely the thing to watch. All right. So this is where we're going to wrap up this live stream. Hope you enjoyed it here. I'm going to be jumping on to Where's the Trade, which is the morning webinar I do with all my big picture trading members, where we turn all of these ideas and analysis into trades. And today we focus specifically on commodities. So we're going to go deep into the entire commodity complex. So those of you that want to continue and join me, you can access big picture trading completely free with a 14-day trial. You can click on the link in the chat or just visit bigpicturetrading.com and just click the 14-day free trial button. When you get there, behind the membership, you'll see a big orange button that says join now, and that's going to get you into the Where's the Trade, where we're going to be live streaming all sorts of great trade ideas and other stuff. So if you want to check it out, do so. Otherwise, this is the last session of the week. Have yourself a great weekend. We'll be back on Monday with another update for all of you that are just watching the channel. Thanks, everyone. Have a great day.